Alright guys, welcome back to my channel. So a quick one here. I was actually looking at this very trade. I've got my eyes on this particular pair throughout last week. I'm not going to be retracing to like a 50% or below the 50% using this sweep level here. Even if you want to use this one, even if you want to use this one or you want to use this one, although I could just use this one. So I expect price around this level here to continue pushing up as to pick out this high and high here, these two highs here, because this could be another potential liquidity level. And this one, they say price already shift for 4-hour time frame. I draw some things in the market which I'll be sharing with you guys, and for some reason I feel like the price is right. Either it has actually come back to my point of interest, guys. So before I quickly go into the topic of the day, which would be a mitigation block entry model, let me quickly do like a breakdown on the analysis and tell you what else you need to know. So this is what happened here. This is a break of structure to the upside on the 4-hour time frame. Then you can see after a break of structure, just the normal thing you should be expecting is you want to see price happen, price action trade into your discount level, so you can get your price, your buy price action at the discount level. So you buy at the discount price, then you sell at premium. So that's the normal thing. So before we go to the topic of the day, I will not be able to do the drawings here because I don't have too many tools here on MT5. So I'll be taking you back to my trading view, where we'll be doing the analysis here. So I already drew out this level here as my point of interest. So this is NZDJPY. So let's go to the trading view. So as I can do the drawing, I'll first of all give you like a schematic diagram of what mitigation blocks are. So let's go to MT4. Sorry, let's go to the trading view. So here on trading view, let's actually do a schematic diagram. Let me just use the 1-day time frame so I can have space. Let's do a schematic diagram of what an ideal mitigation block entry model looks like here. So I'll be drawing a schematic diagram of a mitigation block, a bullish mitigation block, and a bearish mitigation block. So let's just wait for price to load. I think it's bad network, that's why I can't really get loaded here. So I'll just pause and come back when it's ready. Okay, the network is back. So this is what a bullish mitigation block looks like here. So this is how it's been drawn. Let's just say we have a break of structure, price has been going bullish, then price come back to this level here. So this is it here. So this is the mitigation block itself here. So we have the last bullish candle to be the bullish mitigation block. So price actually retracing into this level, and why it's doing that is actually coming into a discount price, which is also a good criteria for buys. So imagine we are having this level here, price actually coming into a discount level here in this mitigation block, so which is actually a good one. So this is what the bearish mitigation block look like. It's actually the opposite of this diagram here, the opposite of this schematic diagram here, where we have price action to come down, create a BOS down, then come back to this level here and start selling. So this is not going to be your initial point of interest where you wait for price to come back to this last sell candlestick here. It will not be your bearish mitigation block. You just want to see your confirmation inside this area. So let's quickly let's quickly relay this message or information down to the chart. Try to identify this diagram, this structure inside our chart here on NZDJPY. So let's actually go into the chart here and let's look at the 4-hour time frame. So this is actually the 4-hour time frame here on NZD card. After having this break of structure here to the upside, we also have that the last candlestick here, the last bullish candlestick here at this level here is where we have our mitigation block candle here the bullish mitigation block, and you see how price came in here and rejected from this level, showing you that price is willing to react from this level. Now the whole essence of this video is more like a live analysis here. Look at the schematic diagram, guys. Look at the schematic diagram. It's the same thing here. Is what we are having here. So the main essence of this video is to be able to show you guys how to get an entry. So it's not about showing you what the mitigation block is. How do you find an entry in the market? Because now we've known what the bullish mitigation block looks like, and we can actually identify it on the chart here. But how do we get an entry? I always say something around your POI. It depends on the time frame of entry you want to use. So let's say, for instance, we're using the 15-minute time frame. So if you are going to the 15-minute time frame, we want to actually see like a shift in market structure here, which is actually going to help us enter this market. Now if you see what has been happening here, this was the first place after the reaction here. After this reaction here, we actually created a shift in market structure here. Let me just delete this. Let me just actually draw everything out, guys, so you can see on the 15 minutes here we had this to be our shift in market. You can just call this level here shift in market structure. Yeah, since it's the actual visible high here, so a shift in market structure, and price actually came down to this other block inside the point of interest, or you can call this one a breaker block. This is a breaker block. I will still teach you guys what a breaker block is, because a breaker block is actually the opposite, or is kind of different. Let me just draw a breaker block so you can see what a breaker block is. This is a breaker block here. A bullish breaker block will actually sweep liquidity before going. So this is a breaker block. Then it's going to push up and come back and retrace to this level here and continue going. So this is the breaker block. Now this will be the breaker block. Yeah, be the breaker block. So let me just check it out. Yes, see what I'm saying now. You see price actually came down here. Price actually came down here, retraced a little bit up, came down, took out liquidity, and this is the bullish breaker block, which price have reacted to on the 15-minute time frame after creating a market structure to show you it's going bullish. And you can see what's going on here, guys. This is what's happening here on the 15 minutes. Now we've had a shift in market structure to be bullish. You can as well go down to as low as 5 minutes. 5 minutes, entering from 5 minutes is not bad. So you can go down to 5 minutes to see things clearly for yourself. So on the 5 minutes, which things are very, very nice here and very, very visible, it's not that confusing. On the 5 minutes, we have a shift in market structure here on the 5 minutes to this level. So we are actually looking for a way to get into this trade, knowing fully well on the 4 hour we have reacted to our point of interest, which is the bullish mitigation block. Then on the 15 minutes, we are now reacting to another point of interest here, which if you look at it very well on the 5 minutes, you see that this is a breaker block here. So we are reacting to this breaker block here on the 15 minutes. This is the breaker block inside our higher time frame point of entry, the mitigation block. Now how do we look for an entry? That is the whole quest here. That's what I'm trying to explain. So if you should introduce your Fibonacci tool, which is something that is very, very good as a trader, you should not let go, because you always want to buy at discount price. So let's just say we are having this retracement now going on. Let's just say we are having a retracement. We want to buy at a discount price. So we'll be expecting price to do something like this, then come into the discount level and give us a bullish move here. Now why do I even actually stop at this level? Look at here, we have a fair value gap here, an FVG. I've talked about FVG in my other videos. If you want to understand what FVG are, you just have to go back to those videos so that you can learn more on FVG. So this is a FVG here on 5 minutes. So we have a shift in market structure here, and we have an FVG below the discount time frame on the 5 minutes. And because you're buying, you want to buy from a discount price, so I will just come back to my MT5 and set this as a limit order around here, because this is actually expectation section, and I don't know when this is going to play out. Not just having here as this point of interest, I also see it as a potential liquidity. Let me take out this Fibonacci too. You can see here these are relative equal lows, so these are potential liquidity in the market here. So as price is taking out this liquidity, I want to see price react to this imbalance here. Let's see what this QI looks like on the 15 minutes, if it's actually visible too on the 15 minutes. Okay, on the 15 minutes is well visible here. We have an imbalance, we have liquidity, we have imbalance, we have a shift in market structure, so everything is complete. So if price actually come down here, this will be a discount price and the market will be actually a nice one from here. So everything is actually working out well. Just want to see price react to this level. Then we have here to be our potential first take profit, which is the old high. Then we can actually go furthermore to this relative equal highs here, this very one here. These are equal highs here, so this cannot be the second level of take profit. But for now, let's stick to this old high here, this very one here. So let's see how we entering this trade. I don't know if I'll be aware or awake, because this is actually 12 a.m. at the time of this execution. So I'll be going to MT5 to set a limit order on NZDJPY. So I want to see price coming to my key level here. Then my take profit is actually going to be this low, or I can, if I'm going to risk too much, I'll have to keep it at this other block. But since this level has been mitigated by the by this gap here, this what do I call it this again, this breaker block, then this should be my new zone here. So this should be my new zone. So my stop loss will be here, my first take profit will be here, then second take profit can go as long as going to this level here. So let's just see, I'm going to take it to MT5 to actually set the limit order. So let's go to MT5. Then our limit order is going to be at 85433, 85.433. So the limit order is going to be at 85.433. So this is 85.433. I think it's way higher than here, 85.4. okay, 433 is this level. Yeah, okay, 433. I don't know why we are having kind of different view here. Let's just put it at this level here, 85.433. 433 is that level. Then stop loss is going to be below this low. Let's just set it as particular. So for those of you, let me actually set this trade orders. Okay, so I want to be seeing my position. So for those of you that did not really understand, after drawing that for our point of interest, which is the mitigation block here, this is the mitigation block, just like I showed you guys on the schematic diagram. This is the mitigation block, and price have reacted to this level. How do we get the entry is what I'm trying to show you guys. Although we actually look like we're about to start going on the 4-hour time frame here, but let's just see if price will be able to give us an entry, a second chance. Meanwhile, on the 15 minutes, this is what happened at this level here. On the 15 minutes, we had our first shift in market structure here, telling us that price is about to start going bullish here. This was the first shift in market structure we had here on the 15 minutes. This one here was a shift in market structure. And after a shift in market structure, I told you that price will trade to a particular level in the market, which was the breaker block, or you can as well just call it a fair value gap here. Look at it here, guys. I've talked about fair value gaps in my video. So this is the fair value gap, the first candlestick, second candlestick, and the third candlestick. So if you're looking at this level here, you can see the gap in between. This is the first, second, and the third candlestick. So let me try putting it in this gap here. You see this gap, then this very gap now is what I want to draw. This very gap here, this is an imbalance in the market. So if I'm trying to draw out that gap, just have to draw it carefully so that you don't wait in the wrong side. You can see that price reacted to this fair value gap very nicely, or you can call it a breaker block on the 5 minute or on the 1 minute, as the case may be. If you look at it from the 1 minute, you're going to see the breaker block very nicely, where I have this to be the sweep of liquidity in the breaker block. Then this old level here, this old level here will not be the breaker block. But since on the 15 minutes we are seeing a good imbalance here, which is the FVG, is actually a good one. So this price reacted to this FVG and it popped out a little bit. Then if you look at it from the 15 minute, we have a shift in market structure here, but it's very visible on the 5 minutes. On the 5 minutes we have a shift in market structure. You can see the shift in market structure already. Now, where are we supposed to enter this market? We don't just want to run into the market. We have a shift in market structure, so there are many things that can go wrong at this limit order, but I hope this limit order should work out, because aside having a shift in market structure, we have this to be an initial level of liquidity that price have to come back to. But the market could be very funny at times. If you look at it from the 15 minutes here, you can see that price have pulled up and has created an inversion fair value gap. I also talked about fair value gaps and inversion fair value gaps. So if you see, price has created an inversion fair value gap here. Price has created an inversion fair value gap. Now we have a 2 point of interest, which is this fair value gap before this liquidity. This is the fair value gap here. Sorry, I'm actually taking too long, but I just want to show you guys how to take trades in the market. So this is a fair value gap here, and this is an inversion fair value gap. Now we don't know which one is going to hold. Is that price come back to this inversion fair value gap here? An inversion fair value gap is when you have a fair value gap to the opposite direct side, which I talked about in my video. You can just go in there to watch. That was my last video. So you see the first 3 candle, 1, 2, 3, and you see this gap here. You have this 1, 2, 3 candlestick. Now we have an inversion fair value gap here, so price can either come back to this inversion fair value gap and start going, because price could be funny, or it can actually come down to take out this liquidity, fill up this fair value gap and start going. Either way, price is bullish. So how do we don't want to miss out this trade? Because sometimes FOMO can play in a high way. We just have to mark out the 2 point of interest, which is this fair value gap after this liquidity and this inversion fair value gap. So I'll be setting my limit order here also. I did not see this clearly on the trading view. I'll be setting my limit order here, and my stop loss is going to be below this other block. This is another block here. My stop loss will be below here. So if price should take out this level, I'll be waiting for market around this level. Then before I can then enter this trade, I'll have to see a shift in market structure on the 1 hour. Why I'm setting the limit order is because of the timing, guys. This is actually 12 o'clock, and I'm not very sure I'll be awake as at the time of entry, so that's why I'm actually setting limit order. So my SO is going to be below this order block. Let's see how price plays out, and I'm going to bring you full details on this video throughout tomorrow, or throughout in the day. Yeah, it's actually a new day, so throughout Asian section completely, New York session and London session, we are gonna just have to wait for what's going to become of this market, like what's going to happen. So we just want to see how price is going to react to this level. So let's actually check out our take profit level. Okay, this should be my take profit level here. First here. Oh, sorry, yeah, this will be like a potential level, this liquidity here, like I said in the trading view. This is a liquidity, this is also a liquidity level. Okay, this one will do, this one will do. I hope I'm not aiming too much. I'm just aiming for the best spots of liquidity. That's like my potential liquidity setup here. So let's just see how price is going to react from our levels. We are actually watching what's going to happen. You can never be so sure about price action. So it can be either here, but this would have been the best place because this is the discount level and you have a liquidity, so this would have been the best place. But sometimes price can actually choose to snub a good point of interest, just continue because of the pressure and the momentum in the market. So let's just watch how this trade is going to go. I'm already taking too much time on the first part of the video because I'm going to bring you result on this particular video, so I have to stop here for now. So I'll see you in the other side of the video where we'll talk about the continuation. Are we going to continue bullish, or is price going to turn bearish from here? Let's just see what we have in this video. Alright guys, welcome back to the other side of the video. Like I promised, I was going to be sharing the result, and this is 1 a.m. almost more than 24 hours since I did the analysis on NZD JPY. So let's just go back to the chart, and here, that's this guys. So if you remember, I had two limit order. One was around this and one other limit order was around this FVG, and I was using it to be my stop loss level here. So that was where I had the first limit order. Then the second limit order, which was the one that got triggered. Just like I said, sometimes price can be very funny. It can just choose to snub a very good area of interest, which is this one, and just continue going. So this was my point of interest, the second point of interest, the inversion fair value gap, and still what price did here. It came down into the inversion fair value gap, triggered it, and I was telling you guys that I don't want to see price go below this 15 minutes order block here. This order block here, this was the last order block, so I didn't want to see price close below this order block. And if you should zoom in, you see that price did not exactly trade below that order block. Yeah, so this is the ending of the order block, and price did not really go below it, it just stopped at it. So the order block was actually a strong one, although spread could actually kick you out of this market. That was why I adjusted it a little bit during the time of the analysis. Then the second point of interest would have been here, using this level of liquidity, but price did not really obey it. More like this zone got mitigated and zoomed off. So that is it on this video. I told you that here will be my first take profit. Then I'll be aiming for this other high. You check it out on the 1 hour. I'll be aiming for this other high, but there's something I saw, guys. There's something I saw. This trade is going to surpass this level here. You look at it from the 4-hour time frame. Are you seeing what I'm seeing? Beautiful liquidity here. This liquidity is actually calling this market, so this trade is actually going to surpass this level here. So for me, I think I'm just going to take my profit here at this double top here. So that's a very good level. So today is actually Tuesday, so before the end of this week, guys, we should be able to take out this high. So going back to the trading view, so guys, as you can see on the trading view, we've actually gone past 50% of our take profit, which was supposed to be take profit 1. Then this other high is going to be take profit 2, so we are still in line with this trade. So that will be all on this video on mitigation block.